Valuation topic is very, very important, very interesting also. Say a lot is to be understood very clearly. Lot of conditions will be there, especially valuation of house property starting from rule 3 to rule 8. There are various rules that we have. So please understand, here it is less of section, more of rules. Whenever valuation is taken up, even in income tax also, perquisites are all done only with the help of rules. So wherever valuation is there, there is a separate wing that we have got to use. So here section reference will be less, rule reference will be more. So valuation of assets, section 7 with the schedule 3. So what are the items of assets that we will be taking up? Valuation of immovable property, that is house property, commercial property is not taken up at all. Rule 3 to 8 coming under part B of that third schedule. Global method of valuation of business. What is this global method of valuation of business? Please understand that a partnership firm is also included in this wealth tax in an indirect form. We will consider the partnership firm like a limited company or like an individual HUF. We will arrive at the net asset value, net wealth value. From that we will be deducting the capital contributed by the partners, and the remaining amount will be distributed to partners based on the dissolution ratio. If it is given in the agreement, if it is not given in the agreement, then profit sharing ratio will be used. This is what we have just discussed. So in order to take up the net wealth of the firm, we are expected to take up global method of valuation of business. The same thing is also applicable for companies also. Part D, Rule 14. Kindly just make note of all this. We will take up one by one. The most important one is the first one. The rest all very simple to handle. Come on. So I will explain the rest. Today I think we will be in a position to do only the first part, that is going to take good amount of time. So firstly, let us take up the valuation of immovable property. See, I have just removed it. Whether you understand it right now or not, so please make note of this one. Then I will tell a big story for this, because you don't find it in any textbook or institute study material. It is all developed in our classroom only. That is, before I could take up this first session in our office, we had one class. So from there only we have just developed it. So before it is to be tested, no, there is taken to the main arena. So at our office, whether they know the subject or not, they will be the audience, and I will ask questions. See, it might look a roundabout way of doing things. Any problem can be fitted into this particular 17 steps. How 17 steps? 9. In stage 2, 6. In stage 3, 2. How come? Say unearned increase to be deducted, or amount claimed by the company, by government, or 50% of step 6 of stage 2. Whichever is lower, that is one block. Final value is step 6, stage 2 minus unearned increase. 9 plus 6 plus 2. How many steps? 17 steps. Now, firstly, I have given you a overall picture, a bird's eye view. Now, I want to take up stage 2 now. Premium count. How many steps that are involved in this 6? Come on. I will unlock all this logic only when we are trying out. Okay, shall I proceed? How many more steps that you have? 2 more. I am just proceeding to step number 5. Definitely it will be looking Greek and Latin only, but for its value you please make note, then you will enjoy doing. So I got to apply for patent and all that. So it is a foolproof system, so don't let the secret. Shall I proceed to the next stage? See, this second step got over. Now there is a need for me to tell or some logic about step 2, stage 2, and then I will proceed. Shall I proceed? See, there is something called as specified area. In the reference they have just made a specified area. Okay. So I will tell you what is that. The logic I will tell you, all of you closely follow. You have a small location. This is 1000 square feet area. When I have to assign value for this 1000 square feet area, should I give importance to the land appertaining to the building, or should I ignore? Should I consider importance for the unbuilt area, or should I ignore the unbuilt area in my valuation? So whether this space should be given importance? Yes or no? Answer to the question is yes. If I say no, I am not correctly thinking. Reason is very simple. If I have 1000 square feet property with no land appertaining thereto, the value of the land with the value of the building with 1000 square feet with no land appertaining thereto will be having lesser value than another one which has got land appertaining thereto, isn't it? So therefore, the valuation should not be for the building alone. We should take into account the unoccupied, that is unbuilt area. So now we need to discuss something about aggregate area, built area, unbuilt area and all that. So this specified area I will tell you later. So aggregate area is equal to built area plus unbuilt area. Do you agree with me? So all abbreviation I think you should be in a position to understand. What is AA, BA, UBA, AA stands for aggregate area, BA stands for built area, and UBA stands for unbuilt area. Okay. Now, so now this specified area focus is only for unbuilt area. So please remember, in step number 1 of stage 2, what is that first step you have just read out? So please understand, the location of the property should firstly be identified. There are 3 classifications that we have for location of the property. One is that in metros, there are 26 cities or towns that we have identified. Then the other areas are to be understood as others category only. So the location of the asset they have identified into 3 categories. What are the 3 categories? Metro towns, 26 cities and others. Which and all 26 cities we will discuss later. We will identify, it is only some names. You will have Tiruchirappalli. So you will have Cochin. You will have what I would say Varanasi. So Narendra Modi. And you have Vadodara, both. So you have all that. So that time itself they have expected Modi to stand in these locations. Contest in this location, not stand. So please understand this, not citizens, cities. Cities are towns. So in metro, what is the percentage? See, in the percentage also, is that they have given? Percentage. Is there any percentage given? No. No, I will just give you. So 60% for metro. So 60% they given for metro, and greater percentage will be given for a little, what should I say, where space is very your precious commodity and all that. So you can say that it is metro 60, 65 and others category 70%. So the rule says that in these locations 60, 65 and 70. Now what is the first step? So first one, find where the property is located. So they are asking us to find out, apply a percentage on the aggregate area, let it be yes. So that percentage I am telling you out of my memory only, it should have been properly given. Of course I am just covering it up, 60, 65 and 70. So let us apply that and let it be yes. Then compare unbuilt area with yes and note the difference. Correct. Then express the difference in percentage by taking aggregate area as base. Then next, if the difference is in the range of 0 to 5%, then you don't take up any percentage as premium. What is the title that they are given? Premium percentage on capitalized value or cost of acquisition plus cost of improvement, as the case may be. Somewhere we would have studied this. Very nice. In capital gains. See, people might ask this question, sir, what is the problem in taking up the cost of acquisition and cost of improvement as the value of the asset directly? People might ask this question, what is the value of the property? What is that people will be telling? The cost of acquisition plus cost of improvement should be the value. But if the cost of acquisition, cost of improvement that to be considered as the base, it may be a historical cost. Are you understanding? My dad used to always tell this way. I bought it in 1968 for 1,800 rupees. So today if somebody is giving 1,800, will he be just giving? No. So cost of acquisition, cost of index may not be appropriate at all. Because that is reflecting historical value. So your rental values are not reflecting historical values. Sir, 1,800 rupees for which you have bought a plot For 2000 rupees you have built a asset, you are expecting 10,000 rupees rent. What is this, sir? Are you having heart? So, are you having heart? Can you ask this question? You cannot. He will smile only. So, the latest value of the property can be gauged by the rental value only. The present day rental value through which you can work in the reverse. Supposing working in the reverse based on the rental value is coming to a number less than cost of acquisition and cost of improvement, then cost of acquisition and cost of improvement can be taking its position. Isn't it? Are you understanding what I am telling? So therefore, it is not necessary in every case that cost of acquisition and cost of improvement can be taken as a base for assigning value for the asset. So this cost of acquisition and cost of improvement will be in many cases reflecting historical values having no match with the income, no match with the market value. Is that clear? So have that in your mind. And if it is in the range of 5%, add nil. If the difference were to be in the range of 6 to 10, add 20. If it is 11 to 15, add 30. If it is 11 to 20, add 40. How to remember? No, it is a very simple. If it is 10, no, twice of. If it is 15, 30. If it is 20, 40. Some way you should remember. But remember this also. So, if it is more than 20%, apply for separate valuation as per rule number 8, fair market value of the property. It is not cost of acquisition and cost of improvement. So, that should be an independent value that you have got to try, that being fair market value. Are you understanding, all of you? So, what you need to do is that copy this. What is specified area? Huh? Percentage? So you have a doubt, huh? You checked up, huh? Correct only. Oh, audit performed, huh? See, our institute is wrong in one particular area. The 26 cities, no, in which Trivandrum they have included, I think. Check up. Oh, just check up. Is Trivandrum included? Huh? Check it up.